Alright, in today's video we're going to go over basic market structure and how you can use it to enter winning trades yourself. So we got a whole bunch, let me go all the way in the sky. So we got bullish fair value gaps to go over, bearish market structure, and bullish market structure. So let's go into the bullish one first. So let's go over what a fair value gap is. A fair value gap is a 3-candle pattern where you find the middle candle and they have to have a neighboring candle with a upper wick and a lower wick that do not fully overlap the large candle. When you find the pattern, you take the top wick and bottom wick, make sure that these do not touch like that, because then this would be overlapped and you would not have a fair value gap. So in this instance, well, considering it's a drawing, we can just represent it like this. The reason I chose to draw it like this is because I wanted to show you how you have to find the volume inside these fair value gaps to show it wants to push back up. This being a bullish fair value gap, you want to see the volume inside the fair value gap relatively stay in here and then go look for price going back up. Because if you had a candle where, say, the whole thing goes like this, and then you had all that price action like that, that's still good. But if you see price action ever just sit in here like this, that is a very nice bullish setup coming in, because price is not coming down here and it's usually being just bought right back up into the fair value gap, and that's showing strength in the direction of the trade. So for bearish fair value gaps, you're looking for the reverse of the bullish one. So now you're looking for a big down close candle with 2 wicks on its side that create this gap, and that being where price action comes to, because fair value gaps are acted as magnets for price. Because the way these fair value gaps work is this is all just selling pressure, so at one point there needs to be a buyer to fill the gap and then continue on with the trend. Again, it's a drawing, but you want to see volume sit in the fair value gap, never go above it if you are bearish, and then it will continue on with the trend. Sometimes price does tend to come out of these gaps, like I've said, and you'll see it during your trading. It's fine depending on volatility, of course. If the market is very volatile, you will see this and it may surprise you a bit. Maybe you'll have a stop loss above here or here. That's fine, but you should understand that price is not just going to sit in here and you're going to be fine. You have to understand prices can be very volatile and you will get stopped out eventually in your trades, so understand that. Now that you understand fair value gaps, we can start looking into bullish market shift structure. The shift from bearish to bullish. So we have lower highs being created while lower lows are being created. At one point, when the lower high breaks in the trend, so right here, this right here is our market structure shift, where I will label it right there. You want to be able to see displacement occur. Again, displacement, the word I keep saying. You want to see momentum and pressure go towards whatever trend you're looking for. In this case, we're looking for a big up close candle. Now, with displacement also occurring, you want to see a fair value gap also be created. So right here we have our fair value gap being created, and this gives us the entry to go to the upside. Alright, so I tweaked the chart here a little, and I wanted to show you my mistakes I would make when I was learning ICT, and to just make sure you don't do what I did before. So here I tweaked up the lower high and the lower low here, and so now if you're seeing this lower high, you might be like, oh, this is your market shift. You do not want to be doing this, because you want to learn how you want displacement with the fair value gap. Here, you don't have a fair value gap. You don't have anything to play off of. Remember, with market shift, you want to have a fair value gap and nice displacement. So to find that, you can kind of look at this range right here. So this is the range of the volume you get here compared to the range you get up here from this lower high. So you see how this one has more impact than this candle right here, giving you the fair value gap as well in this area. That's what you want to be looking for. Make sure you don't do this mistake here, and make sure you put your market shift in the right area so you don't get killed on a trade. For bearish market structure shifts, you have to look at the higher low that was formed by the higher high. So in this case, right here to up here. So now you would be putting down your market shift right there. Let me label it. And now you would have to look for displacement to the downside. And at that point, you have an opportunity for the fair value gap, as we see right here. Right there's your fair value gap. And now you're seeing price action go inside the fair value gap, as it should. Sometimes, as always, remember, volatility does exist, so your gap will not look perfect. And at that point, the trend just continues back down. You target sell side, and that's the story with that. Remember, you want displacement to occur and create a fair value gap when you're doing market structure shifts. That is the key component in this. So now that you know about fair value gaps and liquidity, but also market structure, we can start incorporating it into our trading. So I chose out January 9th. We have a relative equal high sitting here. Those got taken. We have a fair value gap that was created here. Now, when you're looking for fair value gaps, you can find it in pretty much any time frame. Normally, the best ones are in the 15s to the 5s, sometimes even. It doesn't really matter. I like trading 1 minute and 3 minute mainly, but using replay, it's a lot harder to do on TradingView, so we're just going to stick with the 5 minute so it doesn't give me a headache. But let's just play this out a little. So right now, as we can see, the structure is mainly bullish currently. You have higher lows being created and higher highs. So now we're just kind of waiting. We're waiting for that shift in market structure for a bearish scenario. So right now we're just waiting here. Already we're seeing some nice buy side liquidity that got taken from the back over there. And now we are going up towards the high, but not yet. Right now, we just got a nice, not market shift yet. This is not the market shift we're looking for. No displacement occurring. Again, remember, displacement needs to occur when you have market shift. So I'll mark that out, but this is not a market shift. Now we have another low. So now this can be our market shift if we see displacement downward. Let's see what happens. Okay, now that's what we would like to see. We like to see displacement. We still have this fair value gap to remember about. However, we also have, I believe this is a fair value gap here. It is. It's a very tiny one. Let me mark that out. I'm mainly just focused on market shift for some reason here. So we have fair value gap there. That got filled as well. Again, volatility and fair value gap gets filled. Right there is your market shift structure. And now this is going to the bearish side. So now what do we do with this information? So now we let it play out. We go, this creates our fair value gap very nicely. Now in this area, we wait. We wait for our entry point. Right now we hit our entry point. Already we're in the middle. I like taking fair value gaps when they're about 50% into it. If you don't know how to do that, you can take a fib and you can just line it up to the bottom. Now it's kind of messy, honestly, but let me just stretch this out. So our 50 would be at 3937.6. We already hit that. That's a very nice entry point, in my opinion. And I would have probably taken this. And now we just let this play out. We're already in the trade, so we are short down or you're playing puts. So now we're just waiting. We get a nice candle down, and then at that point, now we can start targeting sell side liquidity. Where's sell side? Sell side is down here. Relatively simple. You have your swing low right there. You get sell side liquidity right there. So now we can target this for our trade. You get a little bit of a bounce right there. This is a balanced price range. It actually fits in really nicely. If you also look closely, this fair value gap gave a nice bounce right there. That was the reason for the bounce right there. So now we can go back in. We get sell side taken, and now we can start targeting these lows right here if we'd like. Very big. Again, you have another fair value gap right there. What happens? Price comes back up and comes back down very fast. And then it hits our target. That's really all it is. It's all a mechanism that works together to give you the trade you want. Very quickly, I'll go over bullish market structure shift right now. So here on January 11th, we have this market structure shift right there. This also creates a fair value gap below it. Right there. This is your lower low, higher low, right there. This creates a bullish fair value gap with also showing displacement very nicely. And at that point, that would be your entry right there. I'm not sure if you would have been able to get this one because I think this is actually below 15. Let's find out. Yeah, it was way below. If you made it this far, thank you for watching. Hope you learned something. I had fun making these schematics. And in next video, I'll probably be doing order blocks or depending on whatever the comments want. So, as always, see you in the next one.